Hello everybody, I hope you can hear me. If we have some technical issues and some of you don't hear me, please type in the comment section so we will fix the problems. Alright, so again, good afternoon and welcome everyone. Thank you for joining us for today's webinar, Practical IFRS 16 Tools and Insights for Managing Your Lease Agreements. Right, just a moment. Right, so my name is Agneta Vanskute. I work as a marketing manager at Soft4. I will be the moderator of our webinar today. Here with me is our presenter, Kęstutis Kordanis. He will talk about recent lease accounting changes, challenges, and practical tools for IFRS 16 standard implementation. Kęstutis is a software consultant at Soft4 with more than 14 years of experience in the finance industry, and so far he has worked with more than 30 projects related to the lease accounting and management worldwide. Let me quickly introduce you with our companies. So, Soft4 is enterprise resource planning software provider, certified Microsoft Dynamics Business Solutions Gold Partner. We have been specializing in software solutions for asset finance sector and currently represent 4 solutions. So, one for lease accounting of IFRS 16, another one for leasing companies, factoring companies, and property managers. Our today's agenda. So first of all, we briefly review our changing IFRS 16 requirements for lessees and the requirements which are bringing the most technical challenges. Then we will go ahead and show you one lease accounting example in Soft4's free Excel-based calculator, which you will be able to download after this webinar. So just simply type in the comment section that you need it, and we will send it over to you afterwards. Another example will be shown on our lease accounting system based on transactional software solution based on Microsoft Dynamics NAV. And we will finish our webinar with a 10-minute Q&A session. Just a few notes before we get started. If you have any questions during the webinar, please type in them into the question box in your GoToWebinar control panel, which is at the right-hand side. I will bring them up in the Q&A part. You may submit your questions anytime during the webinar. And also, I will kindly ask you to complete a short survey before you leave. Now let's turn the time over to our presenter, Kęstutis.
Thank you, Agneta. So, hello everybody. So today our webinar is about the software, about the tools for lessees who have operating leases and rentals and will be affected by IFRS 16 new requirements. So let me just briefly remind the essence, what's changing. So under new standards, your operating leases and rentals must be reported on balance sheet, which was not required before. So in this picture, let's say this balance line is what you had under IAS 17 standard, the old one, and under IFRS 16, you would need to disclose your operating lease liability and right of use assets on the other side. So that's the essential requirement. Let's say if you have rental long-term agreement for renting premises and until now it was not on your balance sheet, it just went to your operating expenses. So from now on you have to disclose it on the balance sheet. Okay, now about the calculation, how those two balance sheet items how they are made. This is a nice picture. I borrowed it from Deloitte, but this very clear shows the essence of balance sheet items. So on one side, you have lease liability, which consists of your fixed lease payments plus several other components at net present value, which is pretty straightforward to calculate. But then your right of use asset is made of your lease liability plus any other costs of the asset, any direct costs or payments made before commencement date, and also estimate of costs at the end of lease when you have to return the asset and restore it to a certain condition. So the complexity in software is that, let's say, when this component changes, let's say your fixed payment change, right? Or your lease term changes. Let's say you decide to extend the lease, or you are sure at the beginning that you will run longer. So your lease liability will change, and your right of use assets must change accordingly, right? So if your payments are variable or your term is variable, your liability changes and right of use asset as well. So this would bring some complexity in calculations. Now, what is the impact of IFRS 16? I just listed just a few of them because the impact is very different per company depending on what industry sector you are, what is your lease portfolio, but for sure your finance ratios, KPIs, will change because of the higher balance sheet items. And your income statement structure will change because what was reported as operating cost before now would go into two components or even three components: operating, and then depreciation, and then interest expense. Your purchasing process may change, again, depending on organization, because what was just a part of cost accounting before, because it was just a rental, just a monthly expense, now to be capitalized. So your purchase approval may change. Accounting, of course, must change. And because of that, you may need to update your existing software or implement a new tool. Now, what challenges we see, the technical challenges? First one is data acquisition, your existing lease portfolio, and then how you feed the new leases to your accounting. Because until now, under old standard, okay, very few parameters was required. So when the lease starts, when it ends, what's your due date, what's your amount payable, that's it. Now, to calculate your liability and your right of use asset, you would need to have an interest rate, and this applies to your existing portfolio as well. So there might be, you might need to review all your contracts and find if those contracts has a lease element, because some service contracts may have a lease element included. So the lease data acquisition is a big issue. Transition to new standard. Of course, there are actually two options. Either you do it retrospectively or cumulative catch-up. Retrospective approach is more accurate, but the cost of calculation is higher, and I will show our software can help that. Contracts with multiple assets. Again, it is very advisable to have accounting on asset level. Okay, this is not the requirement of IFRS 16, But that's a very clear advice that many advisors do, and because if you terminate or buy out the single asset, or you extend the lease of a single asset on a contract which has multiple assets, so accounting may become complex. So to simplify that, if you treat every lease, every asset as separate lease, then your accounting would be more accurate. Variable leases is a challenge if your payments are variable, and lease variations. Let's say the IFRS 16 requires you to estimate for how long you will run the lease. And this may be different from contractual term. Let's say you rented asset and your contract is for 24 months, but the asset lifetime is much longer, and you are sure you will run that rental much longer. So you should account for longer term from the very beginning. And if circumstances change and you decide not to extend the lease, or you decide to terminate it before end of term, so your balance sheet items would change. So this is why I listed those challenges, those which are challenges for software, for your tools. Now let me show one example how you can do it in Excel. Let me switch to my Excel calculator. Okay, so this is the sheet for one lease, and it has two sections, initial measurements and subsequent measurements. On initial measurement, we put our lease parameters, the commencement date when it starts, the interest rates, one of the two, if we have the interest rate on the lease contract, we must use that. If we don't, then we must use incremental borrowing rate of the lessee, which is the interest rate at which you would normally borrow for in that market for that term, in that currency, etc. Then we give our monthly payment. Okay, this tool is done for monthly payments, so that's the limitation of Excel. It can be done for different frequencies, but it brings complexity. So the Excel assumes monthly. And then from that, we subtract the non-lease component and say if your monthly payment is 1,200, of which 200 is services. So we must take it out and have the pure, clean lease payment. Variable lease is not supported in this calculator. And then what other liabilities we add, let's say residual value guarantee, or if we are sure to buy out the asset, the exercise price, or we are sure to terminate before end of term. Then if it has penalty, let me play with this. Let's say, for example, the penalty for termination would equal to 1 monthly payment. So our lease liability is now 23,000 something, which is, okay, it is 24 months contract, 1,000 a month, discounted, which makes 22,000, and we're going to terminate. No, then it is not exactly a good example. I would say we are going to exercise the termination option at month 18. We know it in advance. $24. Okay. Or if we're sure to extend the lease, then our contract is 24 months. We're going to extend and run for at least 3 years. So it's at 36 months. So our lease liability is calculated for 36 months. present value of fixed payments, present value of let's say purchase option, right? So it does not take into account the portion which is non-lease. This service amount would go to your operating expense every month, and it's not shown on the balance sheet. What we show on the balance sheet is the lease component in your monthly payment and any other amount due at the end. Okay, then we have the lease term, which we showed already. We have contractual term plus our intention to buy out before or extend. And the next section is measurement of our right of use asset, which is of actually three components. Which first one is your lease liability, then any payments made before the commencement date, and then any other direct costs incurred, and estimated cost for restoring the asset at the end. So this all adds together, and we have our right of use asset. Now we would depreciate our asset in linear method, and need to determine the term of depreciation. So the first question is, would you get the title of ownership at the end? If it is either said in your contract or you have option to buy, which you are going to execute, then your asset would depreciate over the useful life of the asset, which is 60 months. Otherwise, it depreciates over the term, over the lease term. So I put in my lease parameters. In here I have section to reconcile, because the system calculated my payment schedule and amortization, two amortization schedules for my lease liability and for my asset, and now I see it reconciles to 0, so it's all worked correctly. Now, the section B1 is your payment schedule. So you have your due dates, have your payment, non-lease component separated, and it will be discounted at 8% interest rate. Oh, sorry. It's all at 8%. Okay. Now, so that's why I have end of months in this column. I will collapse my payment schedule, and the result what we get, subsequent measurement of lease liability sheet, right? So it starts with opening balance on commencement date. So let's say we started in January, so period end of January, you would get this amount on your balance sheet. Subsequent months, what happens? Opening balance plus interest for the month, less your lease repayment. Again, the clean amount of the lease, no services, plus or minus remeasurement or reassessment. Because, as I said, let's say if in the middle of this schedule, your estimated lease term would change. So your net present value of lease payments will change, and then you put the reassessment in here within the month when the circumstances changed. Let's say you intended initially to run for 24 months, and then after some time you decide, you would do it for another 12 months. So in that period, you would put the reassessment figure. And your balance sheet will show your real intention of the lease term. So, and as we see, your interest is declining balance, and it should end in this case with 0. Yes, the closing balance at the month 24 is 0. The third section is your right of use asset. It starts with different figure, different from lease liability, because we added 3 more components to that. Depreciation is linear over the lease term in this case. So let me do example of one variation. Let's say your lease is your interest rate on your lease changed. I made just one example of variation in this Excel because the variation of term would not work. Because then it gets too complex in Excel formulas. So I put, see, from here, the interest rate may change for different reasons. See, when you modify your lease and it is based on your incremental borrowing rate, you would need to take the borrowing rate of the modification date. The other reason, if your lease payments are variable. So there is a change in interest rate, and we see in our subsequent measurement of lease liability, in that month, opening balance plus interest less repayment plus adjustment. And you have new closing balance. So this would affect your future interest. And what is important and what could be difficult for ERP software is that adjustment goes over to your asset cost, right? So adjustment to lease liability adds to your asset cost, and further depreciation amount is now higher. So what we have as a result, so as an input, we inputted yellow cells in here. In the first sheet, we have our map of GL postings. You see what postings we would produce on commencement date, amounts coming from our calculator, and what postings we produce at the end of each month. So let's say at commencement date, we would debit our right of use assets, credit lease liability, plus credit any payments made before, which would probably sit in accruals because you paid them already, unless you pay on commencement date. Then it would go to current payables. Any initial direct cost, which would normally again accrue it in your balance, and provision for cost of restoring the asset before you return it. So this would go to contingent liabilities account. Every month, you would add your interest expense to lease liability, and then you would debit lease liability on your payment amount. Okay, the service component goes to operating expense, and your current payable is your monthly payment as per lease agreement. Then we post the depreciation of our assets against the balance sheet, any impairment, and the adjustment. Let's say, okay, in which month I did my adjustment? The interest changed in May. Okay. 31st of May. Yes, 31st of May, my postings would be like this. So this Excel works, okay, it might be useful if you have a few leases. Let's say a handful of leases. I saw one company, they managed 300 leases in Excel sheets. So that was too many. It was actually the limit. After that, they implemented the transactional system to manage leases. Now, our next example, is how you can manage your leases in transactional system in Microsoft Dynamics and AV. Let me switch to another demo. Okay, so that's what you see is the home page, the first page of Microsoft Dynamics and AV, which is a ERP system. And on top of that, on top of General Ledger module, we built a specific solution for lessees. So you can account your leases under new standard IFRS16. Again, the essence of this tool is the same as we saw before. You feed in your lease data and you get back your GL postings. So in here you have a tool, import export data. So you load, okay, this is not a flat structure. It has lease agreements, lease units, and your lease payment schedules. So you fill them in Excel, you load them in here. I can show one example how you load. Let's see if I look at new leases. So we have 4 leases in deliberation. And they have Excel sheet, predefined format, where I list my leases, I say the number, dates, who is the lessor, etc. I list my lease units. As I said, it's very advisable, if possible, to have 1 lease per lease unit, unless it is say some minor office equipment or furniture, whatever, then you would list them. And I have my payment schedule, so my due dates and payment amount. So this Excel, so my new leases, import. Now I have to import from Excel, pick the file. Now we are in interim stage. So the number of records in Excel, 1 lease agreement, 1 lease unit, 24 payments, right? The system will check for any errors and give you errors here. You would drill down to see the error messages. If the data validation did not pass, because the data is validated at this stage, and if all okay, no errors, so you resolve them, you apply the package. So your data import is in 2 stages: load from Excel, validate, and apply. Now you see my lease agreement is on my list. Let's look deeper. Now let's see what we have and how it looks in the system. So agreement number, external number for documentation, because you may have multiple leases which are done on the same documentation. So your reference number could be repeated per multiple leases. So the status, now it is in deliberation, it can be either signed, active, or extended, terminated, or expired. Then we have our dates, when it's signed, when it starts, the first payment, who is our lessor, you have the database of your lessors, mapping to General Ledger, so which is Okay, this code gives you the set of GL accounts, because the standard requires you to break down per asset category, and then you can account separately for low value leases and short-term leases, because okay, then the method is simplified. The next section is the lease term, where you determine your lease term and asset depreciation term. Okay, the meaning of these fields is the same as we already saw in Excel. You have your depreciation books, so define the method. Normally it should be straight line, and it gives you the asset values, what's the cost, depreciation, what's the book value. You have your repayment, starting from frequency, which can be anything from weekly to annual. Due at the end of period, so regular annuity, or beginning of period, annuity due. And you have your payment amount. And if your payment schedule is not regular, you go in here, payment schedule, and you say, okay, my first payments are higher. Right? Let's see, first two rentals are higher, and then it's regular. So this is okay for the system. It would calculate your lease liability correctly. Calculate. Yes. So you can have irregular schedules. And then your interest rate. We have one of four methods for interest rate. Either you read it from your lease contract, or you use your borrowing rate at commencement date, or on modification date, or at transition, which would be only used for existing portfolio when you first adopt the standard. Variable lease payments. In here you define if your payments are variable using one of four methods, actually three methods. If it's dependent on index, let's say the rental dependent on consumer price index, or it depends on some reference rate like Euribor. You have your initial measurement of liability and asset. If your lease is denominated in foreign currency, again, we have two currencies, the lease currency and reporting currency. And the system would do an adjustment at the end of every period. That adjustment, okay, this is a bit different. Only lease liability is adjusted. The right of use asset is not. The difference goes to your forex exchange gain or loss. And you have your lease units. So the machinery listed with category, with unique IDs. If there is a residual value, break down per each asset. And you attach your supporting documents. Let's say I would attach something. Do I have something? Okay. And this is stored in your database, and you can open and see your contract documentation attached. Now, once we are ready with our data entry, I would change the status. I say this is now signed contract. So it becomes no longer editable. And then I activate my contract, which will produce the GL postings. And it goes to another list, to the list of active leases. Now, if I look in my active leases, so that's my sample contract. I can see lease liability projection, which actually has the similar fields as what we saw in Excel. It can be viewed as a chart. Remember, our first payments were higher and then regular. Can be shown as okay, now this is per single asset, right? Because it's filtered for single agreement. Yes, for single agreement. I delete the filter. Actually, in here I can freely choose what filters I want to set. Now I see per overall portfolio. Let's say I want to see per some other dimension like lease posting group. Let's see what is my runoff of machinery. Okay, so it's monthly. What I see, monthly closing balance. I can choose other dimension like interest. So amount of interest paid monthly for group machinery. Clear the filter, I see overall portfolio. The same thing we have with our right of use asset projection. Again, this is projection to the future. What would be the values of our right of use asset and what is monthly depreciation? Again, the same thing, you can view it as a chart. Use these figures in your budgeting, for example. So we did single lease, right? And the result, the overall result for the period we have in our general ledger. So this is the sub-ledger for leases, only accounts which are used in lease accounting. And in here we have, okay, split of our cash flows because that's IFRS 16 requirement. Now we have to show a cash flow separately, principal portion, interest portion. And then we have our assets, right of use assets per category, right? At cost, less depreciation, less impairment. And then we have our lease liability discounted. Okay, these accounts would probably be closed because this is accrual account which you paid already, so it would be closed against payables. Operating lease expense, which handles the non-lease component, amortization, depreciation of right of use assets, and interest expense. So we have the column for current month. Actually, I would put the date filter. Let's see, I want it for current month. Okay, so that's what happened in current month. I maybe activated a couple of leases. Drill down. Yes, I did quite a few leases. So the net change is for the month. The balance at date is your closing balance for the month. You take this and bring it to your GL accounting system. This process can be automated as well. Or if your accounting is in Microsoft Dynamics NAV, then it's seamless. It simply go to your GL. How much time we have? Oh, sorry, I'm a bit, I spent too much time. We need to switch to our questions.
All right, so thank you, Kęstutis. Now we will go ahead and take some time for questions. Okay, so we have Zoe asking, when do you think it's a good time to use Excel and when you should switch to the software like yours?
Well, the Excel is very limited. you can think if your leases are simple, so you don't have those challenges which I mentioned with variable leases, with variations, etc. So if your leases are very simple, straightforward, and if you have, let's say, less than 100 of them, then in my opinion, the Excel should work. Otherwise, it's not.
Okay. Aldo is asking, is it possible to run software Lease next to other apps in the Vision?
Yes, absolutely possible. It can, okay, actually, you can run it as a standalone solution, or if you already have Microsoft Dynamics NAV, you can add a software Lease on top of it, because it is an add-on. And we didn't, how to say, it didn't affect the NAV standard objects. It's simply done on top of Microsoft.
Okay, thank you. Irina asks, how should the implementation project be managed across 9 countries, as per your experience? Should there be a pilot, or all countries are at once?
Well, I would advise to have the centralized solution, because in software Lease you can have multiple companies in one system. So it's just one installation, just one software you have, and you account different legal entities in different countries and different currencies. So maybe depending how many countries you have, it's always safer to have one pilot go live and then roll out all others. But advice would be have just one system for all.
Okay. Lucia asks, could you please explain an example in Excel with variable payments?
With variable payments, okay, let's see. Let's say your rental agreement is dependent on consumer price index, which can change, let's say, yearly. So at end of year, if the index changed, your rental payment would change, right? And your balance sheet item is the net present value of all future payments as they are, how to say, as per current index. So we estimate our future payments at the index of today, at the end of year, for example. And next year the index will change again. Your all future payments would recalculate, and your balance sheet items would recalculate. And again, this would be difficult to do in Excel. For this, I would advise to have the transactional system.
Okay, thank you. Sebastian asks, can you track changes of a lessee contract in the NAV software?
Oh yes, absolutely. I will show you. Let's say how easy it is. Say I have my lease and I just go to audit trail, right? And I see every modification I did on that lease, right? Old value, new value, who changed and when. So it's fully traceable.
Okay, and how can the auditor review the changes?
Well, first of all, you have your general ledger postings, which are, how to say, fully auditable. And your changes to your master data, to your agreement data, again, as I showed before, they are all logged. So you simply give it to auditors, your GL.
Okay, and the last question we have today, can you manage lessees as lessor?
Lessee as lessor.
Can you manage lessees as lessor?
Okay, if I understood the question correctly, you're talking about lease-in, lease-out scenario. when the same company acts as a lessee and as a lessor. Let's say you take a lease and you lease it to another, how to say, you act as a lessee on one side and as a lessor on the other side. Yes, we have a couple of customers who actually work that way. They use both systems. They use soft for lessee and soft for leasing. Soft for leasing is our software for lessors. So this scenario is fully supported in our system.
Okay. Thank you. Great. Thank you, everyone. We appreciate you being here. The recording of this webinar will be available on our website the next week. Now we kindly ask you to complete the survey, which you will be giving at the end. It has only 2 questions, so it will take you less than a minute to answer. For any further questions, please contact us at info@softforleasing.com. Thanks again for joining us today, and we will see you next time. Goodbye.
Goodbye.